Welcome to the deep dive. Today, we're digging into a whole stack of notes and articles you sent over. They're all focused on these really intense forces shaping the AI industry right now.
Yeah, we're talking about, well, just the absolute explosion in demand for computing power
Yeah.
that's driving this massive infrastructure growth.
Exactly. And then at the same time, there's this really complex, sometimes kind of messy debate going on about how we actually, regulate this technology that's moving so fast.
So our mission here with this deep dive is basically to cut through all that noise. We want to pull out the most important insights for you.
Right. Help you quickly grasp who the key players are, the ones really fueling this growth.
And unpack some genuinely surprising numbers that show just how fast things are shifting, and also highlight the pretty high stakes involved.
High stakes in both the compute race and these regulatory fights.
For sure.
So we'll zoom in on two companies showing just incredible growth in the AI data center space. That's CoreWeave and Nebius. Then we'll switch gears a bit. Look at this fascinating standoff over AI rules. The clash between state efforts and federal ideas.
And finally, yeah, we'll connect it all back to what's bubbling up in the investment world because these trends are causing a serious stir there.
Definitely. Okay, let's get into it.
All right. So let's kick off with just the sheer scale of this infrastructure build-out. The numbers we're seeing are honestly just eye-popping.
They really are. I mean, look at CoreWeave. They're a major player, right? Specialized cloud stuff for AI.
Yeah.
Their Q1 2025 earnings just dropped, and they're wild. Revenue jumped from, what was it, $189 million in Q1 last year?
To $982 million in Q1 this year.
$982 million.
That's a 420% increase year over year in one quarter.
Wow.
One of the articles we read used this analogy like, imagine a small startup suddenly selling out a giant stadium every single night.
That really gives you a sense of it, that explosive leap.
Exactly, capturing that surge in demand.
And to handle it, they're scaling like mad. They've got, 33 data centers now?
Yep, 33 across the U.S. and Europe, all built specifically for AI workloads, mostly running on NVIDIA's top-end GPUs.
And planning more, I bet.
Oh, definitely.
Yeah.
The plans are to scale even further.
Okay, but here's the part that makes you pause a little. Despite almost $1 billion in revenue for the quarter,
Right. Here's the twist.
they reported a net loss, $314.6 million.
Yeah. A significant loss. And on top of that, they have this huge future-looking $23 billion spending plan.
Okay, wait, a loss with that much revenue coming in, that feels hard to square.
It does seem counterintuitive on the surface, doesn't it? But,
Yeah.
it really highlights the nature of this game.
So.
Well, building the physical stuff, these huge data centers, loading them up with incredibly expensive cutting-edge GPUs, it costs a fortune up front. It's massively capital intensive.
So you're spending billions now.
Exactly. Billions today to build the capacity that's hopefully going to generate revenue for years down the line.
Okay.
And the reason investors aren't totally freaking out, presumably, is the other number you see. Their backlog.
The backlog.
A massive $25.9 billion in contracted future revenue.
Okay, that makes more sense. So the loss is the cost of building the stadium right now. But the backlog shows they've already sold tickets for years of games. The demand is locked in.
You got it. Even if this quarter's profits don't cover this quarter's massive build costs, that backlog number, it's probably the clearest sign we have of just how hungry AI is for computing power.
Companies signing these huge multi-year deals just to make sure they have the hardware.
Billions of dollars worth.
Yeah.
Just to secure access.
So distilling it down, what's the key takeaway from CoreWeave? Why does it matter?
Well, I think what's fascinating is how CoreWeave just perfectly illustrates the whole dynamic of this AI compute race.
Right.
Their insane growth confirms the demand is real, it's immense. But the heavy spending, the upfront costs, and maybe some risk if they rely too much on a few huge customers.
Customer concentration, yeah.
It raises questions about, sustainability. Can this financial model keep going long term? How scalable is it, really?
But they're undeniably a critical piece right now.
Oh, absolutely. Building that foundational layer that so much AI innovation relies on today.
Okay, so that's CoreWeave. Huge scale, huge backlog, huge spending. But the articles also pointed to another company gaining ground, maybe with a different playbook. Nebius Group?
Nebius, yeah. They're definitely being flagged as another top contender for AI data center investments.
And they're seeing big growth, too.
Impressive growth. 385% revenue surge in Q1 2025. Now, the sources didn't give us the exact dollar figures like for CoreWeave.
Right.
But that percentage It's clearly significant. They're moving fast.
And the sources highlighted some key differences in their approach, like being debt-free. That seems unusual for infrastructure.
It is pretty notable. And the other big point was being vertically integrated.
Vertically integrated. What does that actually mean in this context?
So it means they're not just providing the raw hardware, the compute power, which seems to be more CoreWeave's focus on peer scale. Nebius is building out like a broader AI ecosystem.
An ecosystem.
Yeah, the sources mention specific services like Avrida and Toloka. Think of those as platforms that help companies with other parts of the AI process, like processing data, training models, maybe managing those big human annotation tasks you need for AI.
Ah, okay. So it's not just renting out the stadium seats.
Right.
It's more like offering the whole training facility, maybe the analytics team, the coaching staff too.
That's a great way to put it. Yeah, more of a one-stop shop for different pieces of the AI development puzzle.
Interesting.
And this approach, according to the source material, might let them operate at a more cost-efficient rate per GPU compared to some others.
Efficiency plus a wider set of tools. And they're looking ahead technology-wise too.
Absolutely. They're lined up to launch NVIDIA's Blackwell Ultra platform. That's the next big thing from NVIDIA.
Getting the newest, fastest chips.
Getting access to that early, that's a major competitive edge in this race. It's like having the Formula One car for next season before anyone else.
Got it. But what about the financials? Are they facing similar pressures to CoreWeave, losses and big spending?
Yes, to some extent. Even being debt-free and growing like crazy, they're still very much in investment mode.
Still building things out.
Exactly. So they're not profitable yet at the EBITDA level. The sources suggest losses are expected to continue probably until late 2025.
So building that kind of sophisticated setup, the ecosystem, it still costs a ton up front.
Oh, yeah. Massive investment required. Even if you structure it differently, avoid debt maybe.
So zooming out on Nebius, why does their rise matter in the bigger picture?
Well, their emergence is important because it can help diversify the whole AI infrastructure market. Instead of just having a few giant hyperscalers offering the raw compute.
Right.
Nebius's model, with its focus on efficiency and integrating more of those AI development services, that could maybe set a different kind of standard.
And potentially offer better options for, say, smaller AI companies.
Oh, eventually, yeah.
Yeah.
Or companies that need more than just the hardware. It's really fascinating to see these two different strategies play out. You've got CoreWeave going for pure, massive scale, and Nebius trying this ecosystem approach, both chasing the same, booming AI compute demand.
Okay, so you've got this incredibly intense infrastructure build-out happening, billions pouring in from players like CoreWeave, Nebius. And as AI gets more powerful, more woven into everything, the inevitable question pops up, how do we govern this thing? And that's where we see this serious regulatory showdown starting to brew.
It really is. And a key point from the sources was this federal proposal. Some Republicans pushing an idea to basically block states from making their own AI rules for like a decade.
10 years. Wow, that feels like an eternity in AI time.
It does, doesn't it?
But the reality on the ground, as the sources point out, is that states aren't waiting. Over 30 states already have some kind of AI oversight happening.
Exactly. They're tackling real-world stuff now. Like, is the AI used for loan applications biased? Are hiring algorithms fair? How is AI being used in, say, state government decisions?
So they're already acting.
They are, which is why this federal proposal is getting pushback. The criticism is that this federal first, or maybe even federal only approach, well, it risks ignoring the specific immediate problem states are already trying to fix. One article used an analogy like trying to set one single national speed limit for all cars everywhere, while totally ignoring the need for local traffic rules, like school zones or weird intersections, especially when the AI systems are getting faster and more complex all the time.
That analogy makes a lot of sense. A broad top-down rule might just miss all the local nuances, the specific ways AI actually affects people differently in different places.
Precisely.
So who's pushing back against this federal idea? Is it just certain groups?
Well, it's interesting. It's not just the usual suspects, like advocacy groups worried about consumer rights or civil liberties. The source mentioned that even some Republicans are arguing against it.
Oh, really? Why?
Their argument seems to be that states are often just faster, more nimble, better positioned to spot and respond to local AI risks as they pop up, instead of waiting for what might be a much slower federal process.
That really throws the core tension into sharp relief, doesn't it?
It does.
On one side, yeah, a single federal standard could make things simpler for companies operating nationwide, maybe boost innovation because there's one set of rules.
Could streamline things, yeah.
But on the other side, letting states regulate means potentially faster, more tailored responses to actual harms happening right now. But then you risk this messy patchwork of different rules.
That's the dilemma, exactly. This whole debate about where the primary authority for AI governance should actually sit, it's fundamental.
And if you connect it back to the big picture, this fight really matters.
Huge implications. A federal monopoly might simplify business, sure, but it genuinely risks letting AI biases or other harms go unchecked in specific communities or industries where states might actually be better equipped to see the problem.
So it affects things like, well, your job application, maybe your credit score, how local government services use AI in your town.
Absolutely. It's not abstract. It's about how AI shows up where you live and work.
Okay, wow. So we've covered the massive infrastructure build, looked at CoreWeave and Nebius with their different strategies, and dug into this really critical debate over who makes the rules for AI. How is all this translating into the markets? The sources mentioned hashtag AI investing trending hard on places like X.
Oh, absolutely was. You could see the sentiment of a lot of users was really fired up by this recent news, especially the growth numbers from companies like CoreWeave and Nebius.
Right, I saw that example post you pulled. CoreWeave's 420% revenue jump is wild AI stocks are the future. That pretty much captures the mood, huh?
It really does. The general feeling seems quite bullish. Lots of people seeing AI infrastructure and related companies as a major opportunity. A potential gold mine, even.
Although, to be fair, the source material also included that necessary dose of caution.
Always important.
Alongside the hype, there are real concerns about, well, the incredibly high valuations these companies are hitting, and just the inherent risks of investing in a field that's moving this fast, built on so much spending and future promises.
And that caution is definitely warranted. Look, this buzz, this investment trend, it's not just noise online. It's real capital flowing.
It's literally funding the build-out we were just talking about.
Exactly. It fuels the innovation. But if the actual sustained growth doesn't end up matching these sky-high expectations baked into the stock prices,
And things could get volatile.
definitely potential for market swings, maybe even a bubble scenario if things get too overheated. It's absolutely a space you need to watch closely and understand beyond just the hashtags.
Makes total sense. Okay, so zooming back out, recapping this deep dive, we've seen just extraordinary speed in AI compute growth. Companies like CoreWeave and Nebius taking different paths to build that crucial digital foundation.
Right, highlighting the colossal investments needed and those really unique financial dynamics balancing big losses now against massive future revenue contracts.
And we've unpacked that fundamental disagreement over AI governance, that tension between wanting federal streamlining versus needing state-level oversight for specific local risks.
And all these powerful forces are converging, clearly driving significant investor interest, even if it comes with a side of caution.
It paints a picture of a sector just moving at lightning speed, building the infrastructure, wrestling with the rules, and attracting huge sums of money all at the same time.
Yeah, building the plane while flying it and debating the flight plans simultaneously.
So when you consider the truly breathtaking scale of growth we've talked about, the sheer amount of money being poured in and sometimes lost to fuel it,
And the different strategies these key players are using to capture that demand.
plus that unresolved tension over who actually gets to write the rules for AI, the states or the federal government.
It really makes you wonder, what do all these powerful, often competing forces ultimately mean for who actually gets their hands on the most advanced AI down the line?
And maybe even more critically, how are the potential downsides of AI, bias in hiring, fairness in algorithms affecting your community?
Yeah.
How are those risks actually going to be managed or mitigated in the specific places where you live and work?
Yeah, definitely leaves you with a lot to chew on.
It certainly does. And that brings us to the end of this deep dive.
Understanding these connections, the compute race, the regulatory friction, the money flow, it really is key, I think, to making sense of where AI is heading next.
And how it might shape your world. We definitely encourage you to keep exploring these issues.
Until next time.